All right, good morning, everyone. Louis Sports, LinoManimalMarket.com, and this is 11/12, November 12th, the day after Veterans Day, and this is the morning call. Hey, look what we have here. We are actually trading below value. Oh my God. Oh my God. Could this be the start of a correction? Don't count on it. But sorry for the sarcasm, but here's what we got. All right. We have the Globex high up here, okay? And let me get that exact at 2036 half. I'm sorry, this is in the wrong spot. I have to move that. It's at 2036 half. Our bull bear zone will be right here. Also, is the point of control, which is 2033.75. All right. The top of value is 2036 half. 2036 half. A new little feature that Pat has added. We can now put our resistant levels in here. So we got resistance at 36 half is the first resistance. Then we have resistance at 2037.75. All right. 2039. And then after that, it would be whatever 1.5 times the IB range is. All right. On the downside, we have so also, this is something I put in. These beige lines you see here, this was the top of the IB range for London, which was 2035, and the low was 2030 half, and we're trading below that. We got our 5-minute pivot in a sell at 2032 half, 2032 half, which is also right below the bottom of value. All right. So that's going to be something to be looking at. We've got, it looks like S1. Oh my God, we went through S1, which was up here. All these numbers are on into the 2033 half. S2 is 2029. We also have a support here at 2028 and a quarter. S3 at 2027. You know what? I got to check those numbers. That doesn't seem right. But we got the bottom of Globex right here at 2026.75. All right. And then I got a support at 2025. Okay. And then 2022 and a quarter. And wait on the 2020 half. All right. So these little dotted lines are what we tell you that's on the commentary in the morning. Now we've added it so you can put it on the chart. So we've had a high of 2026. We've basically had about 1,000 point range overnight, 36 to 26. It's the first time we've been trading actually down below value. Which if it stayed that way today, that means that we would have a lower value and a lower mode. Not to get all excited, but remember I talked about how this had to get filled in yesterday? Also talked about how the market traded in value. On a normal day, I thought yesterday this is where the market would have went. Okay? And that mode never switched back up. So if I click on this, all right, so this is yesterday's day session. This is the night session. All right. So if I go and try to put these guys together, and this is the day session from the 10th, right? I go like this, and I bring this over. Start to fill in this area here. So that 3-day mode is back at 2033 and a quarter, which is basically where Pat has put the bull bear zone. But you got volume with a lot of volume, you got volume here and a lot of time spent above it. So that's why this was a pretty normal spot. But who could call what this market being normal is lately? So and then that low, well, there's that 2025 and a half. Um, we have there's so much that has to be filled in the bottom. Yesterday, I was talking to somebody that was telling me that they thought, you know, one of the reasons that's fueling the markets is the fact that a lot of the companies are buying, using to borrow money so cheaply because of the rates, and they're going out there and they are buying their stocks back, which is pushing the stocks prices up. They're getting to own their companies and paying themselves the dividends. So that's one scenario, but I can't believe that everybody's doing it. But the rates definitely and the easing has supported the market where it's at. All right. Well, hopefully, I would love to see this market correct a little more, a lot more, because every time I'm long, I feel like the hammer is going to come in, and some news announcement, and the market's going to tank. But this is healthy if we get this correction. All right, Louis Porcelino, manovermarket.com, and I'll be back with a midday update. Talk to you soon. Bye.